Well, talk about this transition then, because over the past few years, I mean, people will look at what you've done over the last few years and call that a turnaround story. Although we should point out, Wells was in relatively good shape even when that asset cap was placed back in 2018. Was that a turnaround story, or was that just kind of regulatory rehab?
Well, I wouldn't call it. I think you're right. It's not a turnaround story. The company was always very strong. We always had a great franchise, but we had to fix things that needed to get fixed inside the company. But from our customer standpoint, we were serving them every day. We were making loans. We were taking deposits. We were constrained on growth, but we were there providing what we did day in and day out. And financially, we were still doing okay. And when we looked at what we were able to deliver, we're not able to grow our balance sheet. We've been focused a lot on efficiency inside the company. We've been focused a lot on growing our fees inside the business. So our corporate investment bank has grown very nicely. Our credit card business and credit card spend is growing very, very nicely. Focused on building treasury services, and now we can grow the balance sheet so we can more holistically serve customers. And that's what you see when you look at the results of this past quarter, with earnings per share up 25%, revenue growth double digits, growth across every one of our businesses in terms of revenue. We're certainly in a different place, and our goal is to be viewed as the best financial services provider in these businesses in the country.
How much of that is because of Charlie Scharf and the executive team, and how much of that is because of market conditions and economic conditions?
Well, I think it's predominantly because of the quality of the franchise and the broad group of people that work at the company. Listen, what I and the new management team have been able to do is get people focused, create a different set of priorities, but a lot of people execute day in and day out. And the fact is, the markets do help. So there's no question that, I mean, these times are really good for banks. And so if you're not doing really well as a bank today, there's something not quite right with either how you're executing or what your strategy is. And that's not lost on us. But again, we look at the underlying metrics of each business. We're growing our consumer checking accounts. We're growing commercial banking customers. We're growing the kinds of loans that we want to grow. We're taking the risks that we want to take that we think will provide strong returns over cycles, and not get over our skis and not pretend that it's all us. Some of it is the markets for sure.
You just reported earnings, and the number that I think jumped out for a lot of folks was the growth in the investment banking business. You've been on a hiring spree there. Does that continue, that build out?
Yeah, so we've been on, I'd call it a disciplined path to growth in our corporate investment bank. We're a huge lender to corporates of all sizes in this country, large corporates down to middle market companies. We provide treasury services, and what we're doing is building on those relationships with a stronger set of products and services, coverage groups, M&A, underwriting capabilities. And so we've been very disciplined about adding resources in a sequential way, seeing that they're paying off, and we're seeing the results. And so, yeah, we would expect that to continue as we move towards our ambition of being top 5.